Well, good afternoon, everybody. My name is Adam Zaglul. I am Vice President Strategy and Planning for NTG Clarity, and I'm excited to share our story with you today. NTG Clarity, for those of you who don't know, is an IT services, digital transformation, software development company with a focus on servicing the Saudi Arabian market. So specifically, 95% of our revenue comes from Saudi Arabia. So I'm looking forward to getting into a little bit about our story now. Most people, when I talk about Saudi Arabia and the Middle East, this is the sort of picture that they get in their mind. Maybe oil-dependent, emerging economy out in the middle of the desert, not necessarily very much else going on. But in reality, Saudi Arabia has been taking its oil revenue and its oil money and reinvesting it into really diversifying its economy away from oil and gas and becoming a hub for financial services, for technology, for sports and entertainment, and for tourism. All of it is a part of their Vision 2030 economic development plan, where they have about $1.3 trillion earmarked for this diversification effort. Now, a huge part of that is digital transformation and software development. That's where NTG comes in as a company. NTG has been traded publicly for more than 20 years now. That's the same amount of time that we've been servicing the Saudi market. So as a result, we think that we offer Canadian and North American investors a pretty unique opportunity to get exposure to all of the growth that's happening in the tech space in Saudi Arabia, while still having the peace of mind of a Canadian management team and a Canadian board of directors and all that kind of thing. At the end of the day, 95% of our revenue comes from Saudi Arabia, like I mentioned. But as all of the investments have been hitting the road as a part of Vision 2030, we've been growing along with the economy. So our 3-year compounded annual growth rate for revenue has been in excess of 60%, and it's putting us on track to reach our 2025 revenue guidance of $78 million. Now, if I was to sum up what our business is, we're basically building the software development and engineering teams that help roll out the end-to-end software solutions that help digitize some of Saudi Arabia's largest banks and telecom operators, and even some government organizations and system integrators as well. I think what makes NTG different is our talent pool. At the end of the day, our talent pool is based out of Egypt, just across the Red Sea from Saudi Arabia there. And we are an IT outsourcing company, a software development outsourcing or offshoring company. Most people, when they think about offshoring or outsourcing, they'll think about destinations like India or Pakistan or the Philippines and things like that. They also might think about cost savings and cost effectiveness. We do offer that cost savings. For our Saudi customers, hiring offshore out of Egypt can actually result in cost savings up to 50% compared to hiring locally on site. But what you get working out of Egypt that you don't get from some of those other destinations is the sort of cultural compatibility, right? Egyptians will speak the same language, they speak Arabic, they'll work in the same time zone, have a shared general cultural background with the Saudi customers, so it really makes for better collaboration that way too. I'll get into some of our main lines of business. Our biggest line of business is our digital transformation software development services. At the end of 2024, it made up about 94% of our revenue. But these are the cases where our customers, they have a whole software development roadmap laid out. They know what projects they want to work on, but they just don't have the expertise and the manpower to be able to do it themselves. So that's where NTG will come in, work with them on anywhere from a 1-year to a 3-year term, and we'll bill them monthly based on the number of professionals that we have placed with them at any given time. And these resources, these professionals, are basically anybody you need for the end-to-end software development lifecycle. They're the developers themselves, they're business analysts and project managers, even UI, UX designers as well. We really see ourselves as being an extension of the software development teams for our customers, and therefore we see ourselves as pretty deeply ingrained in their digital transformation strategies. We see ourselves as pretty sticky. Now, these services can be offered either offshore or on-site. Offshore I already talked about a little bit, but you get those cultural compatibility benefits combined with cost savings, and you still get quality engineers, so our customers are really liking it. It's one of the faster growing lines of our business. As of Q2, it was actually growing year over year at about 90%, while at the same time being higher margin for NTG, the offshore services, so that's definitely a plus. But we still offer these same services on site for the customers that really want that higher level of collaboration. We'll take care of all the visas, work permits, relocation, hassles, and get people in Saudi Arabia to work with our customers on site as well. Now, the remaining 6% of our revenue in 2024 comes from our own line of proprietary software products. That's namely NTG apps. That's our flagship product. You can think of it as a no-code, low-code platform if you're familiar with that sort of paradigm. But basically, we help our customers build enterprise-grade apps that help for the day-to-day business needs. So it could be anything from a full-scale enterprise resource planning platform we've rolled out for some small, medium-sized business customers, but also more niche use cases like IT, trouble ticketing, and field service management, asset management as well for some of our larger enterprise customers. But what's exciting about NTG apps is as of the end of the year, 2024, when it was just 6% revenue, we had about half, 47% of our customers at least piloting the platform. And over the course of 2025, we've seen some of those pilot projects turn into full projects. And as of Q2, NTG apps revenue actually contributed about 20% of our revenue. So we're really excited to bring some increased revenue, but also some margin expansion from software style revenue as we go forward as well. I want to talk about the NTG advantage, or our 3 steps to success, why we've been winning a lot of the business that we have been recently. It all boils down to, I would say, the amount of time that we've been in business in Saudi Arabia, for sure. That 20 years has definitely let us, number one, build some deep relationships in Saudi Arabia. You know, we're on good terms with a lot of the key decision makers in the Saudi IT world. We've built trust with them over the course of decades, and maybe that project manager we worked with 15 years ago has since climbed the corporate ladder and is able to, number one, take his experience with us and find it positive, and then number 2, use his increased influence to award us bigger and longer term contracts as well. The second, step to success is more on the talent side as opposed to sales, but we have decades of experience running education and training programs to fill our talent pipeline. Now that's through partnerships with Egyptian universities and colleges to get new grads interested in coming to work for us. We've even taken it as far as opening our own high schools in Egypt. So the first one opened in 2023, and since then we've opened a second one. But these are dual curriculum, brick and mortar vocational high schools that combine a traditional high school curriculum with specific software development and technology training as well to really get the next generation of professionals interested in coming to work in the space once they're done with their studies later on down the line. But the third step is also educational in nature. It's investing in decision makers of the future. We're taking those same type of programs that we're implementing in Egypt and bringing them to Saudi Arabia with the understanding that a huge focus of Saudi Arabia is upskilling its own local population to be able to do this kind of work. But it comes with the added benefit of these Saudi nationals are also probably going to be the managers and the decision makers of the future, and hopefully be able to close the loop on that first point and offer us some more business down the line as well as we make relationships with them too. So by now I want to take you through a case study of what some of the actual work is that we do on the ground. This is an example of offshore IT and system integration and mobile app development that we did for a system integrator in Saudi Arabia. But we were contracted to develop part mobile app, part internal systems to be used for the Hajj and Umrah tourism purposes. So for those of you who aren't aware, Hajj and Umrah are the major pilgrimages to Mecca. Hajj is probably one of the largest annual gatherings of tourists in the world. So huge tourist operations, right? But the client wanted primarily qualified professionals to begin work as soon as possible, with also some cost savings being a second consideration as well. And on our side, what we did to fulfill the need was basically within a couple of weeks, we were able to place 10 senior resources on this job. Now, these are the system designer, system architect types. They laid out the framework of the infrastructure. They started developing some core functionalities. And over the course of about 2 years from the beginning of this engagement, we grew it to the point where it is now at just about 200 resources. So the benefits to working with NTG definitely shine through. The first is the quality of our work and the recommendations that we get based on the network effect and the relationships that we have. In this case, the CTO was the decision maker. He was recommended NTG by somebody in his network who had basically was a customer of ours and had a good experience. So we definitely see a lot of new work coming through word of mouth referrals that way. But another advantage that shone through was the strength of our talent pipeline, right? Especially when it comes to resources based out of Egypt, we see ourselves as sort of a first mover in that space. There aren't very many, if any, offshoring shops that are able to field, say, 200 resources on a single engagement. I think we definitely show the strength of our talent pipeline that way. So all this success growing with our customers is showing in a combination of things. Increasing contract sizes and increasing contract durations are definitely two of the most noteworthy ones. Over the last year and a half, or so, we've seen a trend in our customers moving from basically only signing one-year contracts with us to being more and more comfortable signing longer engagements. So definitely the highlights are, in August last year, a 3-year $53 million contract, $8.5 million over 3-year contract, and in December, a $22 million contract over 3 years that has since increased in size by about 50% or more. So these are all notable examples. Even just this morning, we announced a new framework agreement with a new customer in Saudi Arabia who signed on for a 3-year contract. So our customers are basically starting to work with us. They see the value we provide and the quality of the resources and the competitiveness of the pricing, and they want to lock us down for multi-year contracts. So we're seeing those bigger contracts come through for longer durations. And as a result, this all plays into our growth. We've seen 17 consecutive quarters of last 12 months revenue growth, and we continue to boast a pretty strong backlog of purchase orders and contracts on hand of over $100 million. Now we track sort of success KPIs on more than just the revenue and backlog side. We also track some customer success KPIs here. Just as an example, from 2023 to 2024, we saw a 25% increase in the absolute number of customers that we had. And during the same time period, we saw about 90% of customer retention. And of those customers that continue to work with us, the majority of them, about 54%, increased the scope of their engagements, so they gave us a little bit more work. So what we see overall as a trend is we get new customers primarily through word of mouth and referrals from existing satisfied customers. The vast majority of them continue to work with us. The majority of them still increase the scope of their engagements. And that all plays into a metric that we track of recurring and reoccurring revenue being at about 85% of our revenue. And then we define that as either strictly recurring, we've got an explicit contract for one of those multi-year engagements, or the reoccurring side being, yes, our customers are only on 1-year engagements, but they have been consistently renewing those contracts for 2 years or more. So I'll get a little bit into the financials. Revenue growth has definitely been the headline of our story over the last few years. I mentioned that 3-year compounded annual growth rate of revenue at over 60%. 2024 definitely was our breakout year at over 100% year-over-year revenue growth. But we're expecting the growth to continue. We see no shortage of demand for software development services in Saudi Arabia. And our 2025 guidance is putting us at about $78 million in revenue, which would be about 40% year-over-year growth from last year. But I think it's important to recognize that we're executing on this growth while also maintaining our profitability. Gross margins have been pretty consistently in the mid to high 30% range, say 35 to 40%, depending on the mix between offshore and on-site resources and also our NTG apps product. And adjusted EBITDA, we've also been able to post some strong numbers as well. In 2024, our adjusted EBITDA margin for the year was about 22%. This year, we're guiding slightly lower at 18%, really in a range 16 to 20. Depending on the amount of investment we see needed to be able to take full advantage of the growth. Like we definitely saw in the first 2 quarters this year, there were higher investment quarters. Adjusted EBITDA was closer to 15% for both of them. But as I think the primary driver behind that is hiring the resources that we need to roll out for some of the new contracts that we've been getting. And as we roll out some of the new resources we've been hiring, their expenses will move from our G&A line to our cost of sales line. We'll get some revenue against them, and we'll be able to hopefully show some margin expansion towards the end of the year, similar to what we saw in 2024 as well. But overall, we are in all quarters for the last few years, except maybe 1 or 2, we have been cash flow positive from operations, so we're in a pretty strong position to keep the organic growth going that we've been seeing. And I want to touch on basically what our growth strategy is going forward. I mean, I mentioned a lot about organic growth, word of mouth referrals. That really is the foundation of our what we see as our core growth model. Our customers are satisfied with the work that we do. They're willing to refer their friends to us. And we're able to work with them and prove ourselves through providing results as well. It sort of enters into this feedback loop of referrals lead to strong performance on our end, lead to expanded contracts, which we then rinse and repeat to continue the organic growth cycle that way. But we've also been able to use this same model to do a little bit of organic geographic expansion as well. Just notably, the markets, not just in Saudi Arabia, but also the entire Gulf region are also digitizing extremely rapidly. Kuwait, Qatar, Oman, they all have Vision 2030 style economic development plans that they're looking to implement, and digital transformation is a huge part of those. Just zooming in on two markets that we already have exposure to, Iraq and Oman together contribute about 2% of our overall revenue. But just looking at this past quarter, Q2, the year-over-year revenue growth in those geographies combined actually increased by about 70%, so it's growing faster than the company as a whole. So we're looking forward to taking advantage of the demand for software development in those regions, both through expanding organically as we have been doing, but especially off of the back of the recent equity raise we did, we're looking to get a little bit more strategic about potential M&A activity as well. We see ourselves as, it's like this sort of everywhere in the world, but definitely in the Middle East, you need the relationships in order to be able to get the business. So we're looking for IT services companies that are basically NTG from 5 years ago, relatively low valuation. They've got some long-term relationships with potential customers, either in Saudi Arabia, customers we don't have, or in neighboring geographies that we'd like to get into, that we could potentially roll up and continue our expansion that way. We would onboard their customers and look to insert our Egyptian offshoring model to be able to serve them and expand the engagements organically over time as well. I just touched real briefly on the Q2 financials that we posted a couple months back. Q2 was another quarter of strong revenue growth, 51% year-over-year growth from the revenue line. Some gross margin expansion as well due to increases in our offshore offering and the NTG apps offering. Definitely a couple of factors hit us on the net income and profitability side. When you compare 2024 and 2025 is the first time we've been paying, especially Canadian corporate income tax, because we had basically used some previous year's losses all the way up and became fully taxable. But also the FX situation, the foreign exchange situation, had become a little bit of a headwind in that quarter, right? A little bit of uncertainty in the US had impacted the US to Canadian dollar exchange rate, which NTG is sensitive to, right? A lot of our revenue is in the Saudi Riyal, which is pegged to the US dollar, so any sort of weakening of the US dollar definitely impacts our foreign exchange and our profitability. But that being said, adjusted EBITDA washes out those sort of macro effects, and what we're left with is 2024 and 2025 showing very similar absolute adjusted EBITDA levels. And the reason behind that is, as I explained, we made a lot of investments, especially in Q2, into hiring the employees and the resources that we think we're going to need to be able to keep the growth going. And as we exit the summer months, a lot of people are back to work after summer vacation and the religious holidays in the Middle East. We're expecting a lot of business to pick up, and hopefully we'll have some good announcements for you soon. I'll just touch on capitalization and key shareholders really quickly. I think the main point I want to get across with this slide is 47 million shares outstanding. Insiders own about 36% of those shares, so there is a huge alignment between management, insiders, and the shareholders at large. I think our interests align very well. That includes, some participation in private placements that we have held a little bit recently as well. But overall, I think NTG, what we're trying to be is an opportunity for investors in Canada and North America more broadly to get some exposure into the rapidly growing technology scene in Saudi Arabia. We've been in the market for more than 20 years. We've got the relationships we need to get in on a lot of the growth, and we bring a profitable business model to it as well. All that while still being, sort of an established first mover of the Egyptian offshoring sort of paradigm that way. So I think I'll leave it at that. Thank you very much for listening to the presentation.